If in your audit risk question you have a scenario where fraud was identified, say in the payables department during the year, you can explain audit risk in a few different ways. One way is to say that profit could be overstated and expenses could be understated in case there is further fraud that was committed by the clerk, but it hasn't yet been identified, because that needs to be written off as an expense, and when discovered it should reduce the profit. So profit could be over, expenses could be understated. Or you can talk about the payables balance. You could say, to explain your audit risk, that payables could be overstated if there is further fraud that has not yet been discovered. And if you think about why that is, well, it is because it's possible that there are more fake suppliers, more payables balances included in the total payables figure, which are not real, which were created as part of the fraud. So payables could be overstated. You can even say, another way to score your audit risk mark for that is to say that there is high control risk because the controls of the company have failed to allow for this fraud in payables to take place, and it's possible that they might allow fraud in the future as well. 3 different ways you can score your 1 mark using either of them. And as far as your response to audit risk goes, then you have the typical response that you normally use for fraud. So you will discuss with management how the fraud was identified, what steps were taken to make sure that it's all identified, what controls were introduced, what steps to make sure it doesn't happen again. You can test those controls, and remember to maintain high professional skepticism and do increased substantive testing on payables. You don't have to say all the things I told you as a response. You can just pick up your favorite 2, but that should help you.